welcome to Innovate Pasadena Presents. My name is Aaron Wheeler, and you're here with us for a special edition of Innovate Pasadena, where we have a forum with question and answer from our audience. So once again, welcome again to Innovate Pasadena Presents. My name is Aaron Wheeler. I'm one of the board members of Innovate Pasadena, and we have special guest panelists today. We have Julia Pina, and Julia Pina, she is a member of the Pasadena Angels, and we also have Ken Hayes, who is a venture capitalist, and for Canyon Creek Capital. And we also, our special guest, as well as we have here, is Arabian Prince, who is the chief innovator for Innovate Next, also a former member of N.W.A. The rap group, yes, N.W.A. the rap group. So basically, you guys know yourselves better than I know you, right? And so what I'm going to do, I'm going to ask you directly, just where you're from, just introduce yourself of what do you do, and how long you've been doing it. So, Julianne, we'll start with you.
Okay. So I came up after college in investment banking, spent about 7 years doing that, and then briefly in venture capital, and then grad school and consulting. And about 5 years ago, I joined the Pasadena Angels. Currently, I am the treasurer there, and I work with middle market companies on kind of filling the gaps in their technology related to being able to run the company with good financial and strategic insight.
Excellent. So I'm going to ask, since you're off the bat, what is an angel investor?
So the lines are blurring a lot in the investor world, but the one thing that is still primarily true of how you define an angel versus venture capital or something else is that angels are investing their own money rather than mostly someone else's.
Okay. Excellent. Good. Ken Hayes.
Well, first of all, great to see you, Aaron. Great to see everybody here. I wear several hats, but the first hat, besides the fact I grew up in the LA area and rooting for the Dodgers, is I'm essentially a recovering entrepreneur. I've been lucky to have started a few companies. I lived in Europe after having gone to school here in the States, and had experience building up companies in the ed tech, which is education tech, and ad tech, advertising tech spaces. Also joined the Pasadena Angels and enjoyed working with very early stage entrepreneurs in that organization. And about 4.5 years ago, partnered up with a fellow in Santa Monica, and we created Canyon Creek Capital's Fund 2, which I'm a part of. And so that fund has made about 40 investments, and we're midway in the fund's life, and we're like the old vaudeville stars where they have the sticks with the plates spinning around, and we have 40 companies, and we're trying to keep the plates from falling down and crashing. In my third hat that I wear, I'm the executive director of a national business accelerator called the Clean Tech Open, and in the Clean Tech Open, we work with about 100 to 200 companies a year in the environmental and sustainability tech space. And every one of those entrepreneurs are convinced they're going to make the world a better place through new energy forms, energy efficiency, new transportation forms, technologies in agriculture, water, food, whatever is going to make the world with better impact on our environment. And that's a huge positive part of my life, very fulfilling. The venture capital is how to make money, and I think part of my mission is to bring those together.
So when let's say someone is beginning, right? They're really interested in knowing what is a venture capitalist. What is that exactly?
Sure. So venture capital, if you think of and Julianne kind of alluded to this. The stages of capital for a company is you typically start with what's called FFF, friends, family, and fools. Those are the first people that invest in your venture. Angels and professional angel groups like the Pasadena are kind of the next stage. Those are the first outside people that might invest in a company. And venture capitalists are the next step. And these venture capitalists, like what we run in our fund, they are investing other people's money and pooling that together to build a portfolio. So in our case, in Canyon Creek, we've invested in 40 companies, and it's it's very difficult for one individual investor to ever get into that many deals, but with professional management you can do that in a venture fund. And our goal is to help companies get to the stage where they are successful enough that they can either be sold to a much larger company or eventually go public on the public markets.
Excellent, excellent. Okay, trust me, we'll get back. We'll come back to it and get a little deeper into it. But I want everyone to introduce themselves. Sir.
Yes, sir.
Arabian.
How you doing?
How you doing over there?
I'm amazing.
Excellent.
Yes, yes. Hi, I'm Arabian Prince, founding member of the rap group N.W.A. I'm a technologist, a futurist, an investor, and an inspirer. That's my new job. I inspire youth to bring out the best in them to achieve the next level of their life. I'll just say that, yeah. And I've been doing technology for 38 years in parallel to music. I've been doing music for 38 years. I had my first record when I was 16 years old, got lucky, made some money, and had a hit record. And at the same time, my dear mother, rest in peace, would not let me cash my first royalty check. She made me give it to an accountant who took that money and put it into investments and some companies I had never heard of, like Microsoft and Macintosh and yeah, some early tech companies I didn't care anything about at 15 or 16 years old. But I ended up making more money in technology than I did in music at the time. And I went, aha, I want to be in tech. So I've been doing tech and all of these things. And now I want to give back. And I'm creating a bunch of open labs across the country to give back to kids and diversity groups and do amazing things.
Excellent, excellent, excellent. So, Julianne, I want to kind of this is all going to kind of go across the board here, this question. What do you see on the horizon of innovation? So I'm going to start off with you, Julianne.
Okay. So there have been some things that we've been talking about being on the horizon for a while now, and I think people are probably starting to think, is that really real? And so, for example, augmented reality, virtual reality, machine learning, artificial intelligence, all of that. I think there was a big flurry of interest, but there was just still too much to do to build the background for it. One of the things that I also do is read proposals for the National Science Foundation, and in that area. And oh my goodness, what's about to come in augmented reality, in artificial intelligence. I can't say any details, but it's going to hit a lot of different industries. And what's going to be really interesting is when everything is converging together. That's what's really powering ideas, instead of just like, wouldn't it be cool if AI concepts, it's applying them to something real.
Is teleportation part of that at all? Any type of teleportation?
You know, as soon as they are, yes. Sign me up.
What do you see, Ken?
You know, I see innovation in kind of two forms. One is the hard tech innovation, like developing new forms of 3D printing. We have a company in our portfolio that's going to be doing 3D printed rocket engines in space. You know, it's going to take 10 years before it gets there, but you know, that's a really, really difficult, hard innovation. The other form of innovation I see a lot of is how to get people to adopt new technology. So it's one thing to just create a technology, it's another thing to get the masses at large to adopt it and use it, and that's not trivial. So some of our portfolio companies are all about how do we take a really difficult technology and figure out how do we get consumers or businesses to adopt it and to use it. That might be based on the business model, the revenue. There's many different ways how it's marketed, how it's packaged, in addition to just the pure hard technology.
Okay.
Yeah, I totally agree with what he's saying, and I see there needs to be a simplification of innovation and technology. And once that happens, it's happening already, because you know, when computers first came out, only people who needed computers used them. Now, everyone needs a computer. I had a friend the other day call me up and says, hey, I need a MacBook Pro. Why do you need a MacBook Pro? Like, what do you do with the MacBook Pro? It's $3,300 and you want it fully blown, but he mostly surfs the web and watches Netflix. You know what I mean? Like, it costs more than your television, and you want a MacBook Pro. But the simplification of technology is going to allow for the masses to create more, and we're starting to see that now with virtual reality and augmented reality and artificial intelligence. And as it gets easier, like for me, I just bought a 3D printer about 2 weeks ago, and I've been 3D printing every single day. It's amazing. So once these things get simpler, it's going to be, you're going to see a big onslaught of more people jumping into technology and innovating and creating and doing amazing things. So
It's actually not hard to make things complicated. It's really hard to make them simple.
there you go. Yeah, yeah.
So so look, with these things coming down the pike, what makes them successful to be investable? You know, what makes VR investable? What makes, you know, AR investable in the coming future? You know,
I'm not really sure that AR and VR are investable today. But, you know, the more things change, the more they stay the same. What's really going to be take off and make people money and change lives by making a difference is when, and I just lost my train of thought. All right.
the train will loop back around. But making things, you know.
What makes it investable? Well,
Yeah.
when
successful investable product.
when you get back to basics and you solve a real problem that actual people have.
Yeah.
You know, I would agree with that. You know, it used to be in the old days, say 5 or 10 years ago, you know, you get a bunch of technologists, you lock them up in a room, and they would create some product, and they would bring it out and assume that the whole world would just adopt it. And that business has evolved now, so it's really more about customer discovery and identifying, okay, what's the real need that this technology is solving? That's the first step. To get to a venture that is investable, meaning will outside people put money into it and have an expectation to get more money out at some point in the future, there's a lot of other factors involved. It's the composition of your team. It's the business model that you're going to market with. It's is the technology itself scalable? I mean, can it be something that can be created on a large scale? So until all of those factors are in place, the money going into the venture is probably not coming out. And our job as investors is to try to see the company at this stage, at this opportunity where we can put the money in. Is there a potential in the future to get more money out down the road? And it has to be a lot more money because it's very high risk. Maybe only 10% of the ventures that we invest in ever become valuable enough to sell again. So our success rate is 10%. If our success rate is 11%, we're making a lot of money. I mean, it's really at that scale. So,
yeah. And it's getting harder to invest in startup companies because so many do fail, and it's at a point to where you got to go, you're not fooling me with that one. You know what I mean? Because like you mentioned with virtual reality, millions and billions of dollars have been poured into VR when it first happened. And then people kind of went, You know, like, I don't want to be immersed for long periods of time. Who's that behind me? You know what I mean? Like, we as human beings don't like to be bottled up for long periods of time. So that's the problem with that. AR is a different thing. AR is more interacting. You know, you're open, you're seeing what's going on. I can be talking to you right now and reading my email and looking at my calendar and all of these things. So I think that's a more viable thing that's going to be more interacting in day-to-day life. And the company Magic Leap, $3 billion have been invested in them, and they have yet to deliver an amazing product. They've delivered a product recently that's, it's okay, it's cool, but it's not $3 billion cool. Like, people are looking at where that money's going to come out of that investment. So that's, I think, the hard part right now is finding something, like you said, that's scalable, something that can make that money. We're not going to have as many companies that are going to just go, oh my God, that company's going to make $100 million overnight. it's a lot harder because everyone's trying to do it. Just like in the rap industry, everybody wants to be a rapper, everybody wants to be a technologist now. So you have to really, really vet them a lot more than you would in the past.
Right, and that actually leads to my next question, because everyone wants to be an innovator or a startup company or a rapper. Is it an investor's market, or is it an innovator's market? Which one is really getting the bang out of their buck out of this? Who wants to take that one on?
I'll just say one quick thing.
Okay.
I think, and you might agree too, a lot of the investors are now starting to be the innovators. They're starting to look within their own ranks and going, wait a minute, we can just take our money and create our own idea and build our own technology companies that way. And I'm seeing that a lot more. They're still looking outside, but they're saying, well, we have more trust in us than we do maybe in some startups. So.
I used to believe that.
Yeah.
But the reality is most professional investors have realized that it's a lot harder to be the innovator than it is to be the investor. And so if you can find an engaged team of people that have the energy and the drive to try to create something big, I would rather put my money into them and say, here, take this money and run with it, because I agree with you, there's a lot of kind of incubators and others where, and a lot of VCs will get very active with their portfolio companies, where they will add extra expertise or things like that, and if a company needs it. But frankly, most investors would rather pick great teams and let them run with it. Whether it's an investor's market or innovator's market, I would say the answer is yes to both, because investors are looking for the best innovators, and there's a lot of both. And the trick is, as an investor, can you get into the best deals? And that's not trivial to do. I mean, in our fund, we've kind of had to battle and fight to get it. It's almost like the celebrity death match or something. We had to battle and fight to get into some of the hottest companies. The market goes both ways.
What about as an angel investor? How would you look at it? Because compared to a fund where you're sort of almost like you're playing the horses, right? You got a bunch of horses and then you can all lay it down. But when you're a angel investor, it's literally your pocket. How do you see that?
It really is a both and. We really do kind of all try to chase the same hot deals, but then at the same time, we also are looking for that overlooked gem that is a lot like the hot deal, but a better opportunity in a lot of ways. I think it has to be a situation in order for the investment to be successful, it really has to be a situation where they're both going, ooh, I want to be in on that one. I want in on that investor helping my company. I want in on spending my time helping that company thrive.
I think to give you an actual numeric example, in the Pasadena Angels, they get about 30 applications a month, which they whittle down to about 4 that present in person. And those get whittled down to 2 that present to the full group. And the group invests in about 2 deals per month. So, it's a challenging pipeline to get through. There's 28 companies that didn't make that.
Yeah, I was going to ask that question between the fund and an angel investor. What is the process? Is it a tighter process because it's so close to the pocketbook compared to a fund? What is that? If you guys can talk about individually about what you talked about the past year, talk about the fund. What's that process?
Typically, the deals that come to angel investors are earlier and riskier. So I would say that there's a little bit more pressure on both sides to be really careful with this process. It can take quite a long time. Most companies who come to us and successfully get investment have really gone through a process of getting to know us, finding out what the hot buttons are, planning not just their pitch, but also their preparations and their activities that they'll be able to report on in this pitch. And on the investor side, you're watching, how does this relationship develop, and what kinds of actions does this person take? How do they treat you? How do they treat the other people around them? How do they treat obstacles? So Does that kind of answer it?
Yeah, it does.
I think at the angel level, the angel investors are going into a deal really in partnership with the entrepreneur, because at that stage, 90% of the potential success of that company is going to be due to the entrepreneur. So angels and entrepreneurs are very much together. When you move a little later stage to venture capital, oftentimes there will be inventions or things in the company, and if that entrepreneur doesn't have the capability or the wherewithal or the maturity to really carry it up, a VC will shift that entrepreneur out and find another entrepreneur. So it's a little more, I wouldn't say it's brutal, but it's a little more of a, kind of a really harder process. I mean, the derogatory term for VCs is vulture capitalists. We try to think that
I was going to say that.
we try to believe that we're not the vulture capitalists, but it's because it's less of a
It's a little less personal.
Yeah, it's a little less personal, and it's more about, this company's got to grow 100 times in the next 3 years, and that's a very aggressive growth, and sometimes you just have to change people and do that to achieve it.
Now, Arabian, you run an incubator, basically, right? So how you pick and choose your projects, it's a little different, because you're getting them first in. You're trying to get them to a point where they're going to angels and they're going to a VC.
Right.
So what is your process?
Well, it's kind of weird. Mine is kind of this Willy Wonka approach. It's kind of crazy because I'm looking for the anti-startup. Like, I'm looking for the regular people, because I know and I understand that there are so many startups out there, technical companies, guys with technical background and know-how who've gone to college. They have these amazing ideas and these amazing things they want to create. But I also understand that there are a lot of regular people at home who've got amazing ideas, but they don't know how to bring them to fruition. So I look for people who don't get the opportunities, and I go, what do you want to do? I'm like, okay, that's not good. That's not good. That's not good. Wait a minute, that's a great idea. But that idea you have is kind of what they had, but they didn't really have it together. Okay, I'm going to put all you guys together, and now you're a new company. You're a startup. And now I've got ideas by regular people and giving them a shot to do something amazing, and then finding an angel, or me, myself. I'm kind of both an angel and a venture capitalist as well. So I kind of play in the middle field, and I'll invest, or I'll find some other companies. And I have another model where I have a lot of big tech partners, big companies that usually don't invest, and I kind of bring them in as partners, like, hey, this company is kind of interesting to maybe your company over there. You might want to throw a little money at this to see what might happen. And I just kind of, play it that way a little bit.
So what is your vision for Open Labs?
My vision is to just give, and I just found out recently it's called Gen Z. I didn't even know, because everybody always uses millennial. Right. Millennials are old, and there's some in this room. You guys are old now. I'm older, but everyone's, oh, the millennials. I'm like, well, they're like 30s and up now. Like, right. Gen Z is, I think I read the other day, is 6 to 22 or something like that. So that's that sweet spot now, the Gen Z, right? So I kind of play in that little field to see who has ideas, and between high school and universities. And then, like we were talking earlier, I kind of skip over the millennials. Millennials are pretty much taken care of in the tech space. And I kind of go to veterans and elderly. So I kind of go Gen Z and elderly and try to find people who aren't as represented in the tech space and give them an opportunity. Because I know there's some ideas there that no one's listening to, and I want to be the guy that grabs them all and makes them happen.
Right.
Well, and the stuff that we were doing 5 or 10 years ago, it's already been there and done that. Yeah. And it's really, the new innovations aren't going to come from doing the same old thing the same old way. We've got to come up with new ideas from new people and new ways of getting it done.
Yeah, and I find that, and I know you might have run across this, you tend to run into the same startup companies with new startups. Like the same people, like they'll have a startup, it fails, and you see them again, they have another company. It's key, because they're good at it. They know how to get the money, they know how, they have the pitch already done. We did this pitch, we got this money, okay, now we have another company. And they just do it over and over. But I want to kind of go around that and find some fresh air and kind of give them an opportunity.
I think this is a key difference from venture versus incubators or angels is in our venture fund, we want the entrepreneur that has failed 2 or 3 times and had a success. We want their 4th venture we don't want to invest in the first one. That's really risky. Angels, and especially the Pasadena Angels, will absolutely invest in first-time entrepreneurs, and it gives a great opportunity to people that don't have an old boy network or a rich uncle. And incubators like yours give an opportunity to an even broader group of people to try to discover if they have what it takes to make it big.
So as investors, what's the end result? I mean, is it a merger acquisition? Is it them going IPO? What is it? What makes you feel good that you as investors are successful at what you do?
I think when the companies grow and maybe learn something and are able to redirect that and continue to have a path, rather than hitting a wall and just kind of rolling over.
I think in the venture world, there's a few rules of thumb. First of all, every company we invest in, we expect would make 20 to 100 times our investment back. And you can really only do that if you grow radically and either do an IPO, meaning go public, or you sell to a larger company. It could be you sell to Facebook, or you sell to Google, or you sell to General Motors or something like that. But the reality is only a fraction, maybe 10% of those companies will actually achieve that return. That return has to be so high to make up for the fact that the other 9 companies are either going to be just break even or a complete write-off. Mergers and acquisitions, I mean, being acquired by a strategic partner is a common exit. Usually not as big as doing an IPO, but if you can do it maybe in a shorter time frame, then that can still be really, really valuable.
Yeah. Do you deal with businesses that they know that they want to be acquisitioned? What I mean?
That's a really good point. It's a discussion we have with our entrepreneurs is actually start at the end game. Meaning 5 years from now, what do you expect to do with this company? I mean, who might buy it at that time? I mean, who's going to be looking for your technology 5 years from now? And then we work backwards. And it actually helps tell us how much should we invest now in order to get the return we need in 5 years from now. It's very hard to make that prediction, but that's the kind of calculation we go through.
Yeah. And for me, I kind of look at startups as, okay, what can we do that can be a successful product, but a viral product? Because if you can make something that's hot and viral, then you're going to have a winner on your hands. And I also try to look at spaces in the market space, like what's missing, what's next? Like, I often say, why are we looking at creating another cell phone? Everybody does cell phones. Why are we looking at, somebody came to me with a smartwatch idea. I'm like, why? I mean, Apple and Samsung, they have that cornered, you know what I mean? And Garmin and those companies. What can we do that no one's done that can go viral? That thing that consumers, which we all are, will go, ooh, I want that now. Yeah. And it may not be successful 2 years from now, but you only need a hit really, really quick. As you know, if you can have something hit and everybody jumps on it, it becomes really big until some other bigger company decides they want to do it too and wipe you off the face. But you can make a lot of money really quickly. So I try to play in those kind of fields.
So question, because you come from the entertainment background, specifically music industry, do you think, and for those who have not, do you think the mentality is basically the same when you look at it, as in from investing in an artist, basically, because that's what you're doing, to investing into a product or a business?
To me, I think it's similar, but where I got my little savvy wasn't even from the music industry, because the music industry is cutthroat. If there are any musicians or entertainers, don't do it, right? This is horrible. But video games, because you find out when you're creating video games, the game can be the most horrible, worst game ever created. But if it looks good and it has explosions and a big red button that's shiny, and
so Michael Bay video games.
Yeah, okay. You know what I mean? So it's kind of tricking the consumer. Yeah. And if you can, unfortunately, trick the consumers, and all the VR people are going to hate me. If you can trick the people to go, ooh, VR is great, everybody buy it, which people did, and then they found out that it's cool, but it's not something I'm going to live my life with. So millions of people bought VR when it was selling out of stores. You couldn't keep the stuff. Now, not as much. So that's the key, is just finding something that's going to be hot really quick make a bunch of money, and hopefully, as you said, sell it off to someone else or move on to the next thing, and just keep that cycle going.
I think what you find is a lot of large corporates. Think of a Facebook or a Google, kind of in our tech world. Large corporates are not very good at innovation themselves. Big companies are good at executing at scale the same product over and over and over again.
Apple.
So they really look to, well, Apple might be a bit of an exception. Well, no, Apple acquires a lot of companies, so they kind of look to see what's growing out in the world at large. Like who's starting to rise above everyone else with a technology which seems to be hot, kind of up and coming, and then they acquire that company. But there might have been 10 or 20 other companies doing something similar, and Apple's only going to acquire one or maybe two in that space. So the trick for us as investors is how do we make sure we're part of that one company that is going to get acquired by a big company? I'm not sure I've cracked the code on that, but we're trying. I'll let you know in a few years.
And angel investors kind of fit a little bit in between these two, in the sense that, sure, we love it when we have a huge M&A deal. We've even had a couple IPOs, very exciting. But because those are kind of fewer and further between, we're looking for companies that are going to have legs long enough to do a little bit more than what Arabian's describing. Make that kind of money for a few years, not just for 1 year, so that they can pay us and themselves and the other people involved, and everybody still can come out ahead. And then, it's great if we can get to the level where it goes to, the whole VC huge ramp up into the sky like a rocket. But if not, we still want to at least be able to have it work out well for everybody.
Okay. So for Angel and for all three, what'd you say? Because I heard you say like 3 to 5 years. You're like aggressively pushing them to do something, result something back and get your money. How long for an investor would you say, as an angel investor?
I think we probably, because typically the deals that we do, you spend another year or two getting them grown up to the next stage, and then that's when they're ready for VC. So we're probably looking at another year or two time frame on what's realistic of when we're going to get paid back. If we think we can get paid back in 3 to 5 years, then obviously there's going to be a little more enthusiasm for that than one of them that looks like maybe 7 to 10. But I think we don't typically think it's realistic to be able to make very much money in 3 years.
I think one of the differences between being an angel investor and having a fund is a fund has a defined lifetime. Typically, it starts out at 7 years and may get extended up to 10. But at the end of that fund's life, the managers of the fund need to sell off their stock. So that's what drives a lot of the pressure to get the company within the time you invest in the company to when you can sell it off needs to happen within that fund lifetime. So that's why there's a lot of pressure, as well as the pressure to deliver. For every year longer you hold the company, you have to make another 20% or more in value. So the farther you get, the steeper that value has to rise, and it gets harder and harder to keep that up.
Yeah, and for us, it's a lot. I won't say it's easier, but we are the ones who are getting the startup ready for the prom. We put the suits on them and put the ties and go, okay, we're going to make you look good. But we really try to do our due diligence and go, you know what, we really want to make this a great product so that an angel or a VC can really be interested in it and kind of guide them through that path to get there and actually stay with them through the whole process to build a great product. Because that's my goal, is to build great products that we can bring to market. So we just want to make sure that everything is like polished and nice and shiny and getting ready that way.
So we always talk about AR and VR and all those things. We'll not talk about VR anymore, but AR, right? But if you could see the possibilities in between AR and clean tech, which one is higher on the horse on that one?
Ooh, I think they worked hand in hand, because I think that augmented reality in the next 2 to 5 years is going to be just interwoven in our everyday life. Like there's no doubt about it. Like when you wake up in the morning, you're gonna interact with augmented reality, and you're gonna interact with artificial intelligence every single day of your life, whether you're at home, whether you're at work, in your car, because I mean the heads-up displays in your car as you drive now, you're gonna be able to see, like you'll be driving and like, you've got mail, you know, like you, all of this stuff's gonna happen literally on your heads-up display. So I think that along with clean tech, it's gonna go hand in hand, because you're gonna have autonomous vehicles, that self-driving cars, which are gonna be augmented and AI and clean tech. Elon Musk, his first loop, it's December. They said the first one's December, done. So there's going to be a lot coming up. So I think, to me, they go hand in hand.
Yeah, it's not an either or thing. I mean, you know, clean tech and environmental technologies in general have the opportunity to be some of the absolute biggest business opportunities of our generation. And I didn't come up with that. You know, people like Michael Bloomberg, Richard Branson, or even Arnold Schwarzenegger is a huge environmentalist, are really putting their money where their mouth is and saying, look, clean tech is a massive investment opportunity, because we have these new technologies. The electrification of transportation, for example, have new forms of agriculture that are less wasteful, use less water, have the opportunity to improve the lives of millions and millions of people. So they will have massive impacts. The challenge as investors is, how do we capture that to make it worth investing in, so that as we're benefiting the world at large, the investors that took the risk also get paid back and earn a return on that risk.
Your thoughts?
With them.
Because you said you have an incubator, clean tech incubator, right?
Yeah.
Right. So I was trying to see if there was if there's any inside we can have some understanding of, like, is where really should we really put our money into AR, or really put our money into clean tech?
Well, I mean,
be straightforward.
I would honest to goodness, I really would do both.
You know, a lot of what drives,
and they really aren't in conflict.
Yeah.
Not at all. A lot of what drives the investment decision is your horizon. So a lot of clean tech technologies, like say a new battery technology, can take 5 or 10 years to actually come to market. So as an investor, you have to have the patience to put in money and not see any revenue at all for 5 or 10 years. And by the way, you may need the Department of Energy, you may need lots of big regulatory bureaucracies to approve your technology along the way. A lot of the current software or app-based technologies, you know, you can put an app together, upload it to the App Store, and, you know, whether it's Apple or Google, and you'll find out pretty quickly whether people like it or not. I mean, that's a very short time to determine if that investment was worth it or not. So a lot of it depends on as an investor, what your horizon is for the technologies.
Okay. Well, you know what? At this time, we're going to go to some Q&A from our audience. So you guys, are you ready for that? Ready for the Q&A? Because this is the fun part, right?
Yeah, it is the fun part.
So if anyone has any questions in the audience, please raise your hand. A mic will come to you.
Great. Thanks, you guys, for answering the questions and for moderating. What website do you look at when you first wake up in the morning, and what book are you reading?
Well, I'm a big cartoon SpongeBob fan. I said that on television. So for me, it's SpongeBob first, and then I go straight to the Google and Yahoo News and just kind of go through that, go through the tech side, go through the investment side, and then it's right after that, it's opening up my Robinhood app, looking at the investments and stuff like that. And actually, the book I'm reading now, it's so funny, I'm doing it in reverse. I'm reading all the Harry Potter books now because I saw the movies first and everybody kept telling me the books are better than the movie. So now I'm going back to that. Yeah.
You know, I hate to say it, the first website I look at when I wake up in the morning is Facebook, but as my 20-year-old daughter would say, that's because I'm old. And I got to admit, I don't read a lot of books. I read a ton of articles online from, for example, Harvard Business Review and others that But the best book I've read recently, and this really informed me to get involved with the Clean Tech Open, is called The Climate of Hope by Michael Bloomberg and Carl Pope. Michael Bloomberg, hugely successful self-made business person, and Carl Pope, who was the head of the Sierra Club, came together, and in that they have the theme that clean tech and sustainable technologies are some of the biggest opportunities of our business opportunities of our generation.
So I have been rereading 2 books lately. One of them is Jeff Olson's Slight Edge, and that's about how little easy things to do that you actually keep doing repeatedly really add up and make a difference. And the other one is called Girl, Wash Your Face, and it's about dealing with reality and not being so hard on yourself about it.
Any other questions?
And then as far as what website, I try to avoid them for at least a couple hours.
Okay. Yeah, thanks for sharing your insights. You guys have mentioned in different stages of the company, you guys look for certain things, right? Like on the entrepreneur quality at the very early stage, and can that entrepreneur scale to the point where you can have a big exit? On the other side, are there certain things at each single stage where you guys look for that you guys are definitely will not invest, whether it's the industry, the nature of the industry itself, or it's certain traits of entrepreneur that you seek? Are there a certain consistent sort of a checklist that you at least go through during the evaluation due diligence?
For me, I think it's, when I meet with people, it's about how well they listen, because I listen well. I listen to everything that they say. I listen to the big vision, the big picture. And then I try not to get too involved in a company, but I want to understand when we set ground rules and when we say, okay, this, and this, it's one thing to be excitable, it's one thing to be energetic or eager to get your stuff going, but also you can see some reckless abandon in there as well. So you kind of got to look and go, this person seems a little bit unstable in the sense that he might, I'm not sure what he's going to do with the money or do, like you have to kind of use your gut feeling in a sense. And you may be right or wrong, but like I said, when you're dealing with your money and other people's money, you kind of got to be a little patient and kind of vet through those kind of things. So I kind of look at that first. And then I kind of look at, as far as type of industry, I come from the rap industry. There's not too many things I probably wouldn't invest in, but I try to keep it as clean as possible. Like everybody's saying, you need to invest in cannabis and really I've never smoked a day in my life ever. So for me, it's kind of like, I don't understand it. And my next door neighbor, she owns a couple of companies and she gave me like gummy bears. And I'm like, ooh, candy. So there's money in that too. So I'm looking at it because it's a multi-billion-dollar industry and it's actually bringing a lot of money back into the States right now. So I'm like, that could be something to look into. So I'm open.
I'm less concerned about particular industries. We focus a lot on the entrepreneur, and there's a couple of red flags for us in an entrepreneur. One is if they think they know everything, because I can absolutely prove that they don't know everything, and that sets off a red flag. I would much rather have an entrepreneur be straight up honest with me and say, I'm great at technology, but I'm horrible at marketing, because that's a problem I can help solve. But if they say they're great at everything, first of all, I don't believe it, and that's a red flag. And I think the second red flag is any lack of honesty or lack of integrity, because if I have to discover that this entrepreneur lied to me, if I have to discover that, then that is absolutely disqualifying. If they had a checkered past, or they made mistakes when they were younger, I can handle that as long as I'm hearing it from them and they admit it and they take accountability, responsibility for it. But if I ever have to discover it, then that's a disqualifying right there.
So to add to what's already been said, finding that balance between having kind of like what you were already implying, a certain humility, but also some real confidence, and then just curiosity, so that you're really engaged in the thought process, and you have some strength and some backbone, but not so much that you're just stuck. in your thought process. That's pretty important. And as far as industries I'm interested in, it's ones that I have some understanding of, which is biomed, robotics related, not so much the online stuff. There are just too many people who are better at that than I am. And normal consumer stuff that regular everyday people, I'm a mom too, things that I can relate to with my family, my kids.
Question over here.
Thank you all for being here tonight. It's been really enlightening. Have you found that founders have become more savvy in terms of their negotiations with offer sheets and things like that, in terms of not wanting to give up as much of their company, pushing back on certain things, and has that affected your ability to invest in certain startups?
I think there's an ongoing process of everybody at the table is getting more sophisticated. They're learning from each other, and the table stakes do keep rising. And I think that's true for the investors as well as for the entrepreneurs.
I'm actually usually relieved if an entrepreneur is well versed in the complexities of arcane term sheets, which can be many pages long and filled with all sorts of clauses. It's hard to expect an entrepreneur to be well versed in that. It's almost unfair to expect them to be well versed, but I would rather have a sophisticated entrepreneur who understands what they're going into. Investors they're not trying to hoodwink or trick entrepreneurs, because at the end of the day, as an investor, you're betting on that entrepreneur as a person. And if they feel resentment or if they feel like they got a bad deal, that's going to end up showing in their performance. So I would much rather have an entrepreneur go in with their eyes wide open and completely understand it. And that said, there is an increasing sophistication of entrepreneurs, but there's also an increasing complexity of the actual deals themselves. So it's kind of an endless process of learning on both sides, frankly.
Yeah, I agree. And I think that because of the internet and YouTube, people can go and research. So you're having a lot of the entrepreneurs doing a lot of research before they go into the deal. So they come in with a lot of expectations and, well, this company got this or this company did that. Every deal is different. Every deal is different. The amount of money that you get on every deal is totally, totally different. So they a lot of times want certain things or demand certain things, and a lot of times it's not going to happen because, like you said, every deal is different. And sometimes with us or other companies, what if you just gave $100,000 to this startup, and then you're the startup that comes after, and you really didn't want to give $100,000 to that company, but it's something that you're really interested in, and then you may not be as much, so you might only want to give them 20. They want 50, and it's this whole thing, and then so it's really a learning process, and we try to teach. We try to teach whoever we work with on how to grow in business when they're going to deal with the next stages of their business, going forward.
And you have to also realize that everybody's kind of in this process of, are we going to invest in you? Do you want to take our money? It's a little bit like dating. In the early stages of dating, everybody's putting on their best face, and we know it, and you should know it, and so you have to kind of add a little bit of grain of salt to what you're seeing. So just because the person's able to pull off looking a little sophisticated, well, okay, good, but what's underneath that?
Anyone else have a question? I have another question. Is an NDA a bad word? Actually, it's 3 words, but that's not the point. Actually, it's 2 words. Anyway, so it's a non-disclosure agreement, something when someone brings up, well, I'll show you mine if you sign this. How's that?
I avoid them like the plague.
Yeah, so
I see so much from so many different sources that there's just no way to avoid seeing some other similar idea. And if you want to try to stake a claim on a section of my brain, I'm not going to have the ability to follow through on that for you. So why would I try to create expectations that can't be met? So keep your real secret sauce just keep it secret. Don't tell me.
Yeah, I think it's true that as an investor, you'll see a number of companies doing something similar, not exactly the same, and just as a blanket policy, sophisticated investors just will not sign NDAs. And if an entrepreneur comes and insists on it, that's almost a rookie mistake, and that can almost be disqualifying. I will always give the entrepreneur a benefit of the doubt first, because they may have gotten bad advice, but as a venture capitalist, even as an angel, we just, as a matter of policy, will not sign NDAs. Now, that said, we also stake our professional reputation for not taking somebody's idea and blabbing it all about on the internet too. So I think there's an expectation from entrepreneurs, and they should make that, they should ask up front and say up front, don't tell my ideas to others, but I'm not going to sign an NDA for that. Now, we will do it later on in the negotiation, maybe when we actually do a deeper dive due diligence, but that might be after the 5th or 6th meeting, and where we're actually pretty far along in the process, and we actually do want to see if that technology is viable. But in the early stages of discussion, we would never sign that.
Yeah, I totally agree, because anyone can come in and say, I want to create a different kind of air. Okay. I need you to sign this NDA. No, I'm not going to sign that. Like, prove to me that you can make a different kind of air. And like you said, once you get deeper into it, then maybe we can talk about NDAs and things like that. But someone told me a long time ago that it's so hard to defend an NDA anyway in court. Because like I says, there's so many ideas out there at the same time. Like, think about it. We've all thought about some idea. I want to create this, and then next thing you know, you either turn on TV and there it is, or it might have been out 2 years ago and you didn't hear about it. So it's even the person who's creating something, there's already something out there just like it that may not be getting enough traction. Like, you go through the App Store right now, there's 1,000 apps that do identically the same thing. What makes the one hot? And I always say this is a funny thing, is I say, why is this one better than that one? It's probably marketing, and the little icon looks better than the other one. That's probably it,
So do you think startup investing, is it a fad? Has it become a fad now? It's just like, oh, I do it. What's your thoughts?
It's an ongoing fad. People who come out of a situation where they've got a little bit of money and they're not real sure what they want to do next, and they don't want to go back into that grind again, they'll dabble in some investing, and then they'll kind of get bored of it, or not everything will work out, and that's not what they were aiming for, and so they'll go off in some other direction. It's just an ongoing cycle of that every time there's an economic boom.
Yeah.
I think startup investing has been for many years, until recently, really only within the last couple of years, has been limited to really the top 1% of wealthiest people in our society, because you had to be what the Securities Exchange Commission calls an accredited investor, meaning you have to have a certain minimum income or certain minimum net worth in order to be allowed to invest in startups. Recently, within the last 3 or 4 years, there's a new form of startup investing called crowdfunding, and you can go online to sites like Seed Invest or Our Crowd to find companies that you can invest as little as $1,000 into, and you don't have to be an accredited investor. So it's a little bit of a fad, meaning that startup investing is now open to the population at large, rather than just a tiny fraction of people. I think that's a huge opportunity. It's an opportunity for a lot more people to partake in the growth of early innovative companies. But it is, as Julianne said, it is a fad, because most of those investors don't realize that they're going to lose 90% of the money they invest, and that last 10% is going to take 10 years to make money. So people get in really quick, they put in a bunch of money, and they go, oh my gosh, it's going to take 10 years for me to see anything out of this. It's a lot different than investing in the public markets.
Yeah, and I think it also has to do with what's hot. Like blockchain. Bitcoin. You know, the keywords that pop up that people see on the news all the time. They go, okay, blockchain. What's blockchain? I don't know what it is, but everybody's investing in it. I want to get into blockchain or Bitcoins or this or that. So it's also this thing where it depends on the keyword and what's hot any given year. A lot more people pop in when they hear about a lot of things. And, you know, I tend to find out that a lot of the big money is being made in the really, really quiet stuff like med tech and, you know, things like that. So you have to kind of weed through the noise and find out what's really, really making money. Yeah.
So how do you know, Arabian, how do you know a good innovator? What's the characteristics?
Somebody who knows more than me? No. But no, I really, you know, I like listening to people. And a lot of people talk to me about their ideas, and sometimes I'll hear something, I'm like, man, that's different. Like the way that this person is wired is different. The way that they talk, the way that they think about what they want to create is different. And I think that's a special person. There aren't that many people that are like that. So you may want to give that person a shot over someone else who just has an idea. Like, oh yeah, dog biscuits. No, this person has something. And you know, that's kind of what I look for, is that special thing. And it has nothing to do, we talked about this earlier, it has nothing to do with being smart or intelligent. It's just that one little thing that they may have. Like I spoke earlier about a little kid. I was at a tech thing I was speaking at, and a 4 or 5 year old kid was with his mother. And I'm like, little dude, like, what are you into? What are you interested in? And he goes, I want to make better peanut butter. And his mother laughs, and I'm like, he's got something in his head. So I hooked up his mother and him and his father to go to Kraft Foods and go to the food the food scientist, you know, thing, and they took him around, and now he wants to be a food scientist. So it's kind of like finding that kid who, he didn't say, I want to play with toys, I want to play Fortnite or do this, I want to make better peanut butter. I'm like, aha, there's one. So that's what I kind of look for.
I think the you know, after having worked with hundreds of entrepreneurs, I've come to the conclusion that it actually doesn't matter what college you went to or whether you're part of an old boys network or something like that. Those things can certainly help. But the distinguishing factor for me of an innovator and a successful entrepreneur is somebody who's able to learn. And the question is, how fast can they learn? Can they try something new? They've got an idea, they try it out. And if it doesn't work, how quickly do they figure that out and try the next thing? And the faster they can iterate and learn, the more successful they're going to be.
Julianne, really quickly?
Yeah, so I really look for both and kind of people. I mentioned earlier about people who are both confident and humble. On the innovation side, I want people who can both be really creative and different, and yet at the same time stay grounded in the reality that the rest of us all live in. So if you can make something happen that takes both of those, then you're really going to make something happen.
Well, you know, I'd like to say thank you very much for being on the show today. Our special to Innovate Pasadena Presents. You know, it was a pleasure. The audience had wonderful questions, and I just want to say thank you, audience, for watching and being a part, and keep being innovative. Have a good night.